Market structure is the best trading strategy out there, and if you're looking to make money in the forex market, you should learn how to trade with market structure and you are good. And in this video, I'll be teaching you a very simple step-by-step process on how to start marking out your structures. And also in this video, I'll be showing you a very simple step-by-step process on how you can identify them and also learn the types of market structure we have in the forex market. Make sure you watch the video from the beginning part to the end part, because every part of this video have something important to offer. And make sure you subscribe to this channel and like to the video. See you guys on the chart. Market structure is simply the direction of price. That's just the simplest definition of market structure. Okay, it doesn't need to get better than that. Okay, it's just simply the direction of price and how price moves in the market. So price doesn't just move in a straight form like this. Price don't move in a straightforward, just straight like this. No, it does not drop like that. Okay, rather it creates structures. Okay, think of it like a building. Okay, a building just don't stand. Okay, they have to create structural part of it for it to stand. Okay, so that's just the way the forex market moves. It's just like a staircase. It has step 1, step 2, step 3, step 4, just like that, steps by steps, step by step. That's the way the market moves. And as a trader, it's very, very important to identify the direction of which the overall market is going to. Okay, and how can we identify that? Okay, first of all, we have the bullish market structure, which is simply the upward movement of price. Okay, when the market is bullish, we tend to see highs and lows being formed. Okay, in every part of this, be it bullish or bearish, it tends to present highs and lows in the market. But there are characteristics of this bullish market structure that is different from this bearish market structure. Everything here is just more like the opposite of each other. Okay, so right here on the bullish market structure, markets tends to create expansion, retracement, expansion, retracement, and this ending part that you can see right here, okay, is a high. Market tends to create high and low, high and low, high and low. So the market creates highs and lows, okay, just for it to push to the upside or to the downside. Just note that. Okay, so after a high is being created, the next thing expected is to create a low. After creating a low, then price will create a high. So price expands, then retraces back, expands and retraces back, expands and retraces back, just like that. Okay, so here on this bullish market structure, you can see that these lows created are being maintained. Price doesn't come to take them out. Okay, price maintains it and never breaks that low. Okay, so just have that in your mind. So you can see that all of these lows you are seeing right here, they are being maintained. Okay, so that's why it's called an upward movement. Okay, but for price to come, and as price created this low, if price should come and take out any of this low when the market is bullish, that means automatically we have switched from that bullish to a bearish market. Okay, so on the bearish market structure, you can see that price is just when a bearish market structure occurs in the market, it tends to break lows. Instead, it breaks lows. If you look here on the bullish market structure, you see that price breaks highs. Price tends to break highs. Okay, price expands and breaks highs, then retrace. That's what the market was just busy doing here on the bullish market structure. You can see that price is just breaking the highs and keeping the lows. Okay, this is the low right here. Let me increase this to 12, and this and this and this. But you can see here that price is keeping the highs and breaking the lows. Okay, that's just the simple characteristics. You can see that it's just the opposite of what the bullish market is doing, and identifying these lows and identifying this high is very important as a trader. Once the market is presenting you something like this, depending on what time frame that you are trading on, but I recommend 4 hours time frame because it's more clearer there. Okay, once you identify your structures on the daily time frame, then you still scale down on the 4 hour to identify what the structures is doing on the 4 hours, then learn how to trade along with them. Okay, and everything here I'll be teaching you guys on how to trade these structures. You can see price is just breaking the lows, keeping the highs, breaking the lows, keeping the highs, breaking the lows, keeping the highs, breaking the lows. Okay, and you can see here this is the high, 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 high. Just like this, the high was left here now, the low was left here, and this downtrend, which is the bearish structure, the highs was left. Okay, and if price is to break above and close above this high, that is, the trend has changed just like that. Okay, so we should be expecting what? Higher highs to be formed, okay, and higher lows to be formed. Okay, lows that are high that are lower than this. Okay, you can see that this low is lower than this, and this low here is higher than this, so we call it higher highs. Okay, although I will still be presenting that to you guys, but you can see once there is a break just like this, the trend has changed from being bearish to bullish. And the same thing applies here. If market breaks this low which you are seeing here, then the trend has changed from being bullish to being bearish. Okay, so that's just how simple it can get. Okay, so this is just a very simple example on how the bullish and bearish market structure appears on the chart. Okay, although I will still go to the live market and show you on the candlestick, but for now this is just the representation drawing for it. Okay, so right here I'm going to delete this. So on the consolidation market, the market just maintains the highs and lows. And at this point, we are just, as a smart money trader, you should just avoid the market because there's nothing much here. Okay, there's nothing to catch. Market can just be ranging for days and for some hours, and you can just sit and watch and wait for a breakout. Okay, after a breakout, then you look for your entry to start taking the trades. Okay, so on the consolidation market just maintains the highs and lows. Okay, if you look here, there is no break below, there is no break above. Market is just forming a series of highs inside that the same range, and in this process or during this time, you should be able to identify this and just stay away from the chart for that time, because as a trader we're always looking to catch movement. Okay, we're not here for something that's just doing like something choppy. Okay, that's why we wouldn't be trading around this point. So we should just avoid the market, and if you don't understand how to trade it, just stay away from it. Okay, so we'll be diving into how highs and lows are being formed in the market and how we can actually spot them and trade along with them. So looking at the chart here, guys, you guys can see that these are the characteristics. These are the major characteristics we have. You have to learn that price always creates a high. From a low, it creates a high, and from a high it creates a low, and from a low it creates a high. And if you look here, the high here is higher than the previous one. Okay, if we have anyone here, it should be higher. Okay, so let's just take it from here. Okay, markets form this high, form this low. These two lows, which one is higher? Is obviously this that is higher than this. So we call this low you are seeing here a higher low. When we are in an uptrend, we call those lows that are being formed a higher low. And when we're in a downtrend, it's the opposite. But looking at here, from this higher low, we should expect a break of this high. So when this high is being broken, this is a structure here, okay? You can just say that this is our structure here. This is a structure. This high here is now a structure built up by price, okay? Price built up the structure, and price can break the structure at any time, okay? Just take it like a building, as I said earlier, and it's just very simple, okay? And these are structures. These are structures. Even this low below are structures. Price can take it out anytime. They are structures. Okay, so price created this high, created this low. That's the way we expect price to be pushing. Created this high last. Okay, for price to break below just like this, it would cause what we call change of character. Okay, price will change from this bullish move that you are seeing here to a bearish push to the downside. And as you can see, if you look at this in an architectural way, you will see that price is forming more like a building roof, okay? A roof, okay? But I don't want to dive too deep into this course, okay? It's just very simple, and I expect any of you here to understand, because I'm trying to break it down to the simplest form that anyone can easily understand this, okay? So if you look here, price should just break this low during an uptrend. That means we have changed from what, this bullish market to a bearish market, and that's just the simple way it can be. So when you come to the chart, your first thing to ask yourself as a trader is, what is the structure of the price on the higher time frame? If you are using the daily time frame as your higher time frame, you scale to the daily and check the structures forming on the higher time frame. If the structure is bullish, that means if you're now going to the lower time frame for any entries, you should always be looking for a buy trade only. And if the structure is bearish, you should only be looking for a sell trade only. And this push, you can see here, all these lows that are being formed is called higher low, and all these one are being called higher high. And the same thing happens here also. The high that are being formed during the bearish market is called a lower high, and the low that are being formed during a bearish market is called a lower low. Okay, it's just very simple, and this will only happen during the bullish structure, and this will only happen during the bearish structure. Okay, so if you look here, it's just very simple, guys. These are structures, and price will break them. Okay, price will break them just like this. Okay, so I'm just deriving to you that price doesn't just move straight. Price moves in step by step. Okay, that's just the way price move. And this, you can see here, is just an expansion. Let me show you. This is a retracement. Okay, I will mark the retracement in red. Okay, and this is an expansion, okay, on green, and this is a retracement. We always expect a retracement once a high is broken, and this is an expansion, just like that. And this is an expansion right here, and this was meant to be our retracement. Okay, it's just very simple, guys. It's just very simple. Expansion. After expansion, you get your retracement, expansion, you get your retracement, expansion, you get your retracement. Okay, so the same thing with the downtrend. Retracement, we should use color green. Then expansion, because it's a sell, which means red. When you see a sell something on forex, it's always represented as red. Okay, the retracement happened again, just like that, and price will continue to tank down. Expansion, retracement, expansion, retracement. Okay, and if price retraces and break this previous low, that means the price has changed from what, this bullish structure to a bearish market structure. So you should be waiting for a retracement to expand to the downside to start breaking structures, the lower structures. Okay, and it's just very simple, and this is just how you can just keep it very simple like this, guys. This is just how price moves in the forex market. So we're going to be diving into the charts to see how this thing forms on the candlesticks. Okay, and we're going to be using the 4-hour time frame for this practical. Okay,